So again, my name is John Newfer. I do a few things. I am an AE over at Velocity. What's up, Chicago? Mr. Reed, how's it going? How's it going? I appreciate that, brother. I appreciate that. All right, so let's get into it, guys. If you want to throw me a deal, the easiest way is to send me an email here, jnewfer at Velocity Mortgage. Shoot me a call or a text. My cell phone number is right there, so you guys got me. Now let's get into it. All right, so first things first, high-level overview of what Velocity is, kind of what we do, and I'm going to be hitting most of these points throughout the presentation to just give you more detail and why we do what we do. So first off, from a high-level overview, Velocity is a wholesale lender. So wholesale meaning we don't have a direct channel to the borrower. So any deals that come to us, all of them come through our broker channels. So Velocity doesn't really handle any face-to-face or any retail business. So everything comes from our broker channels, which is really nice if you're a commercial mortgage broker or if you're trying to do this on your own. Jumping into the next point is investment and commercial property. So Velocity lends on strictly investment 1 to 4s and commercial properties, no primary residence. So like we are strictly an investment and commercial property lender. And we're going to get into further detail later. The third point is we are a small balance lender. So small balance, I'll give you a definition for that later, but really we keep a tight box of where most of the transactions take place in this country, which is normally between 100 grand and 5 million, and we'll dive deeper into that later. And then finally, Velocity is a simple underwrite lender. So we underwrite our loans from as the most basic underwrite that we can go through without losing any deals due to the small things like seasoning issues, things like that. So very simple underwriting, very common sense underwriting as a private money lender. Our goal is to fund as many deals as we can. We securitize these loans. We sell them on the secondary market, and they do perform with our extremely simple underwriting. And I'm going to show you what that looks like later on. So let's get into it. Cool. So first off, let's talk about what wholesale lending really means to us. So all we do is represent the money, okay? We underwrite the loan, we approve the loan, we fund the loan. That's Velocity's job. Your job as the broker is to be the face of Velocity's money, okay? So you guys originate the loan. So you're the one who sources the borrower. You guys sell the loan. We don't sell the loan. It's you guys who are jumping on the phone call selling our terms. And the cool thing is, being a wholesale lender like Velocity, you can even table fund with our money. So your firm, like Mr. Reed up in Chicago, you can show as the lender of record with our loans. So that's like a really sweet sales point. It's table funding, true table funding. So from the term sheet all the way through onto the HUD, Mr. Reed, your firm can show as the lender of record all the way on the HUD. So for example, I run a brokerage. It's called New Finance. So you guys can check out my website. It's New Finance. I do private money, commercial loan brokering. So I like to send deals to Velocity when I source borrowers, because when I source a borrower, go through the Velocity, and guess what? Borrower doesn't know who the actual lender is. All they see is New Finance. So New Finance is the lender of record here. And how I pitch that to my clients, normally I'll present a term sheet. The term sheet at the top will say, New Finance is the lender of record. I don't want to get in hot water because at the end of the day, I'm not the decision maker. So what I like to say is, as you can see, borrower, New Finance shows as the lender of record. And basically what that means is we have sourced we've sourced an investor for this deal. And so this investor likes to, let us show as the face of the company. So this is what's called a table funding loan, which means we've sourced an investor for the loan. We're going to show as the lender of record. New Finance is going to show as the lender of record. However, all we are is representing someone else's money. So that's what we say. All we are is representing someone else's money. So that's how it normally looks. All right. Any questions, guys? Anybody want to type in the chat on what wholesale lending is, or do you guys have any question about what table funding looks like here? I'm just going to leave it open to the chat. Table funding is a totally, it's kind of unique. If you're on the residential side, you've probably heard the term, but normally you need some sort of credit line to be like part of a wholesale lender where you would show as the money, or you need to be a commercial or a banker, right? But in this case, you could be a straight up brokerage. You don't need to show any kind of qualifications to be a table funder with us. It's extremely simple. We do a background check. We do look at your entity. We do that kind of stuff. However, outside of background checks, we don't need to see a funding portfolio or anything like that. You don't need any kind of track record, really. I can bring you as a table funder as long as you're willing to fill out the paperwork and the background checks. So, all right, I'm going to move on to the next point, guys. If I could get it to change slides. There we go. There we go. All right, so let's talk about how you guys get paid. So how you get paid, we are one of the only lenders that allows you to charge up to 5 points. Now, those 5 points can be structured in a couple of different ways. One way, the first way, is yield spread. So we still do yield spread. We used to allow our guys to do 2 points yield spread. Right now, we're at 1 point. Who knows? We might be able to bring back the 2 point yield spread. But right now, you can earn up to 1 point on the yield spread, and you can charge an additional 4 points on the front. I say 5 total points because the max you can charge on the deal is 5. So hopefully that makes sense. You can earn up to 5 points with us, 5 total, whether you build it into the yield spread or you put it on the front end. Now, the cool thing about Velocity, you can also build in processing costs. So if you have like a fee that you have a processing company that comes in and does your processing paperwork, and by the way, if you need help with that, just let me know. Over at New Finance, I do contract my processor for a small fee. But yeah, you can build in processing line items on the HUD. So if your processor is charging $8.95, for example, we'll put that as a line item. As long as the total fee that your firm is charging doesn't exceed 5, we're cool with it. Any questions on how you guys get paid? Anybody have any questions at all on how yield spread works, how you get paid, line items, anything like that? Just throw it in the chat and I'll try to address it. All right, moving on. Property types. Property types. So we do 3 categories of property types. We do investment 1 to 4s, multifamily, and commercial real estate. That's what makes Velocity such a good foundational lender for a private money loan brokerage. We hit all categories. Our underwriting is extremely simple, so most borrowers qualify, and you can show as the lender of record. So the beautiful part of all that is we're just a great foundational lender. You can call us like your in-house lender, for example, or your in-house money, because you're showing as the money. The underwriting's extremely simple, so you know that deal is going to fund when we give you a term sheet. You're almost 100% certain that it's going to fund. And we're hitting all categories, investment 1 to 4, multifamily, and commercial. So it's just a no-brainer to set us up, at least as a foundational lender. Sure, you can still throw loans with other lenders like RCN and all the other guys, but Velocity's underwrite's so simple, and we have so many advantages for our brokers being wholesale. It just makes sense to always screen it by us first. And if you can sell our terms, you got a great place to land deals. So first off, 1 to 4 investment properties. Let's talk about the property types. 1 to 4 investment. So basically what I'm trying to say is no primary residence. I can do residential properties, but it can't be a primary residence. That's all I'm saying here. So we could do single families, we could do duplex, we could do triplex, we could do fourplex, we can do condos. As long as it's not a condo hotel, we're cool with condos. So feel free to throw us any kind of 1 to 4 investment property. Multifamily mixed use. So the second category is multifamily mixed use. So basically what that means is anything that's 5+ units, we're going to call a multifamily. And then that also includes your mixed use assets. So if you have anything that's got like 5 residential upstairs and 1 commercial property downstairs, that's mixed use. Or even just 1 unit residential upstairs, 1 unit commercial downstairs, we're calling that mixed use. Now the third category is commercial. Commercial is going to cover anything office, retail, warehouse, basically any general use commercial property. It's a good Velocity loan. We do not like the special use assets. So no land, no hospitality or special use, like, for example, like a franchise concept like a Denny's or a McDonald's. I would call that a special use standalone restaurant. On the commercial side, we're also not a fan of environmentally hazardous assets. So if you have any environmentally hazardous assets like a car wash or a gas station, or I would say not a laundromat, but a, where you get your clothes, not a laundromat, but it's the other one, dry cleaner. There we go. So dry cleaner, these are environmentally hazardous. Dry cleaners, car wash, gas station, oil rigs, it's not a Velocity deal. But if it's a general use commercial property where we could put almost any kind of tenant in there, that's a money deal for us. Any questions, throw it in the chat, guys. I want to hear what you think. If you have any questions, if you have any scenarios, shoot, I'll go live with you. If you have scenarios, we'll talk about it. All right, now let's talk about these niche assets and why we're the best. So first off, if you get a 1-to-4 residential unit, there's always all kinds of questions like, how about this? How about that? Let's just talk about short-term rentals. We love short-term rentals. I actually have no seasoning requirements on short-term rentals. So you'll see some lenders, they're like, yeah, I'll do a short-term rental, but I want to see 6 months of proof of concept income, right? We don't need that on a refinance or a purchase. Sober living houses. So I get a lot of sober living houses, senior and assisted living. That's my money. I love doing these kinds of assets, and most lenders deny your short-term rentals or your senior living or your sober housing. We're cool. I just did one where we had a business where it was an SFR, and the guy was running his business out of it. It was like it's like a tech company. It was totally weird. He was charging like $40,000 a month to himself in rent. We can do that kind of thing. So if you have somebody who's got an SFR, they're running a business out of it, that's a velocity deal all day long. Daycares as well. I love daycare. So multifamily. So let's talk about some kind of niche aspects to our multifamily. So we have no residential percentage requirements. So for example, you'll take a loan that's mixed use and you will go to, these lenders like RCN, for example. I like to throw them out because they're just another big name out there, but there's a lot of guys, right? They normally want to see at least over 50% of the property has to be residential usage. Velocity doesn't care. We don't care the percentage of usage on the residential side. It could be, 10% residential and mostly commercial. We'll still do it. So that's a huge niche aspect. And then getting into commercial, self-storage, auto repair, warehouse, office. This is our niche. So if you want to send me a deal and it's a straight up commercial property, I want to see general use commercial. I mentioned that earlier, but these are a few assets that we really excel at: self-storage, auto repair, warehouse, office. Any questions in the chat, guys? Please throw them in there. I want to answer your questions. I want to make sure you guys are fully informed, and I want to make sure you know how to send us a deal. I'm going to stop right now. If you want to send me a deal, if you have anything that I've talked about so far, just shoot an email to me. I'll put it in the chat. I'll put my email address in the chat. Go ahead and send me an email, jnewfer@velocitymortgage.com, and I'll review that scenario. Or if you want to just give me a call, you got my number. It's 25. Actually, you know what? I'm not going to put it up here because I don't know who's going to call me, but I'll take emails. Okay, let's move on. Primary selling points to our loans. Okay, so the first thing that makes us the best, quote unquote, private money or 30-year or DSCR lender, what makes us the best is that we have no debt service requirements on 1-to-4s. Almost nobody does this. When someone comes to you and they say, I want a DSCR loan, what they're saying is, I want a no personal income verification loan. However, if you take it to lenders, they're going to say, okay, what's the rent? I want to see a 1.5 DSCR or a 1.2 DSCR, which means, does the property debt service on what I'm going to be issuing? Does the property's income service the debt on that ratio? But guess what? You're going to run into issues here. You're going to get this deal submitted. It's going to be a fantastic rate. And what ends up happening almost every time, appraisal comes back and the DSCR doesn't look good. Now you're screwed. And you're like, man, I need someone who doesn't care about DSCR. That's where we come in. No DSCR requirements on 1-to-4s. No payment reserve requirements. So I literally have, this is part of my guidelines. I have no payment reserve requirements. You know why this is awesome? Because almost every lender wants to see that you have at least 6 months of payment reserves. Now that's a problem for most investors, real estate investors, because they're always stretching the bill. They're trying to invest in as many assets as they can because they're all about equity and cash flow. And so they don't like to hold on to reserves. They like to put their money into loans to buy houses. So reserves is almost always an issue when we're talking about real estate investors or fixing, flipping, and investing in rentals. No payment reserves with us. I don't need to see 6 months reserves. Now, when 6 months reserves will come up would be if like we got an issue with credit. Okay, well, show me 6 months reserves, and that's a compensating factor. Now we're talking about compensating factors and common sense underwriting. but I have no payment reserve requirements as my general underwriting guideline. So it's a killer sales point if you're working with a borrower who's strapped for cash. No source of funds for down payment. So if you get a 1-to-4 investment property or any deal that we're doing, I'm not going to season the source of funds for your down payment. So I've had borrowers come to me, we're doing a loan, we're at closing, and they don't have enough money. I have people just wiring money into their account to get us enough money to close this transaction. And guess what? I'm not seasoning that money. I don't care where it came from. As long as it's coming from my borrower's bank account, I'm happy. So no seasoning. I don't need to see that it's been in there for 60 days. That's why Velocity should be your foundational lender. It's our simple underwriting guidelines. Now let's talk about holdbacks. So are holdbacks available if your property is a little bit distressed? So let's say we get going into a loan. I have one right now. It's a multifamily asset. One of the units doesn't have a heater. It doesn't have what was it? It's a water heater, and there's something else it doesn't have. Guess what? We're going to still do the loan. We're just going to hold back the money that it would take to get that unit occupiable. So do we do holdbacks? This is a huge selling point. Yes. If your property comes in, it's a little bit distressed, we will hold back the money, which means we'll still close the deal. And then once the borrower does the rehab, does the little fix that we need, we'll disperse the money. So we'll just reimburse them the money. It's called a holdback. Really good way to keep deals alive when issues end up showing up. No FICO score requirements. Oh my gosh. No FICO score requirements. Is there a lender out there that has a no FICO score requirement on a 30-year term? No. Velocity is the only one that has no FICO score requirements on their deals. At 50% LTV, you could give me a deal. I have a lot of these coming in where these are borrowers who never get loans. So they never get loans. Since they never get loans, they don't care about their FICO score. They have all this equity in their assets. Like I got borrowers coming to me that have 100% equity. They don't have a single lien on their house, but their FICO is garbage. And so it's kind of like this spiraling effect where it's like my FICO's bad. I can't get a loan. So I'm just going to own all these assets free and clear. Well, guess what? Now we have a product that can finance these kinds of individuals who never cared about their credit, but always had equity in their assets, or like inherited properties. I got a guy right now who inherited an asset a year ago. He's coming to us. His FICO sucks because he's young. He has no FICO, no credit history. Comes to us, no FICO score requirement. I'll give him 50% cash out, and now he can pull cash out of an asset that he just inherited. That's our program highlight. Killer sales point right now. Now let's talk about people who just have bad FICO scores in general. I'll still do it at a higher LTV. So if you got a borrower who's got a 600 FICO, I'll get you 60% LTV all day long. Now our guideline for max LTV, if you got a borrower who wants a max LTV, I'm 650 FICO, which is actually really easy to achieve. A lot of the other lenders are like 670, 680, 690 for their max LTVs. I'm at 650. So remember these key sales points, guys. This is what makes Velocity a niche lender better than everybody else, are these key little underwriting things that just make us the best. No FICO score requirements, no DSCR requirements, no payment reserves, no source seasoning on source of funds. I'll hold back money if the deal's distressed. It's just an all-in-all killer product, and you can brand our money as your own. So you can be the lender of record from start to close. All right, moving on. Let's talk about our loan amount. So like I said earlier, we are a small balance lender. And basically what that means is $5 million is my max. I don't go above $5 million. I'm sorry. You got a $10 million asset. You want to bring me a deal that's $10 million. I'm sorry. I'm going to say no. I'm going to say $5 million is my max. Can we do 5? So that's it. If you got a large balance deal, it's just not our box. Now, we do make exceptions if it's close. So let's say you got a $10 million asset and they want a $6 million loan. Well, that puts me at 60% LTV, and I'm only a little bit above my max. Don't be afraid to send it to me, and we'll talk about compensating factors and how to build a case with my underwriting team. So exceptions are cool. We're an investor's lender at the end of the day. We're common sense. We want to fund your deals. So send it on through. All right, moving on, guys. Let me see if I can move this around. I don't know. I don't think I can move that. All right, let's talk about simple underwriting. I've already mentioned like all the key sales points that makes our underwriting better than all the quote unquote debt service lenders, even though Velocity still issues a 30-year term with no debt service requirement. Let's talk about simple underwriting and really what that means. So what it truly means is no income verification, no asset verification, no tax verification. This is huge for your owner users. This is what you call a quote unquote no doc loan. We don't really use that term anymore because people who still have PTSD from the 2008 crash understands that no doc loan is kind of these Nina loans or ninja loans or what brought us into a recession. The thing is, we have such a good history on no defaults. Like our default percentage is so low. It's the way we underwrite. The location is primary, and we'll talk about location later, but basically it's simple underwriting. No income, no asset, no tax verification. It's all you got to remember. That's what makes us the best on the private money commercial side. All right, so let's talk about our products. Okay, so we have a few products that we sell. We have a fix and flip product. We have a perm loan product. I really only have two products. Then we have this little bridge loan that's kind of like an ARV loan. It's similar, but just no rehab. But really, at the end of the day, I like to say we have a few products, but these are the two primary products. The first one's our ARV Pro loan. It's for fix and flippers who have money, who aren't stretching it too much. They're pros, and they know what they're doing. Our average rate is around 10 to 11.5% on our fix and flip. That is much better than most of the competition. Most of our competition's at like 12 to 13 to 16% sometimes. Velocity is around 10 to 11%. So we actually just lowered the rates the other day. We will go up to 85% on the purchase. I know my screen says 80%, but we just updated this program. We'll go up to 85% on purchase, and we'll do up to 100% of rehab. And we max out here. If you guys are familiar with fix and flip terminology, you're going to get this next line. But if you're not familiar with fix and flip terminology, this might be a little bit over your head. Don't worry about it. I have a lot of videos teaching you what loan to cost is, what ARV is, how to calculate it. So if it's above your head, just go further in my videos, look up loan to cost in my videos. But we will go up to 100% of rehab. This presentation is dated. I will go up to 90% loan to cost. So if we have a total loan amount, the loan cannot exceed 90% loan to cost now, as long as we have an experienced investor. 75% ARV still stands. It's a 12-month interest-only loan. You guys, this is a fix and flip loan. It's just a typical 12-month interest-only loan. Very easy to achieve. Everybody issues 12-month interest-only loans. Sometimes it's 6 to 18 months. 12 months is our average. Our loan amount. So this is where we really break the bank in comparison to the other lenders. So we will go all the way down to $75,000. So that's pretty common. But most lenders don't go above $2 million on a fix and flip. We go all the way up to that $2 million mark. And plus some, if we have a real experienced investor, you can go whale hunting with the Velocity product. You can go hunt some whales who have a very large deal in Beverly Hills, and we will do those large fix and flip deals. We will go above 2 million if it makes sense. FICO score requirement, 650, very easy to achieve. I don't work with anybody who's got a below 650 on a fix and flip. Sorry, guys. It's got to have a 650. Borrower has to own their primary or a rental property at bare minimum. If they want to do a flip with me, they at bare minimum got to own something. I can't just give someone a fix and flip with no experience. 1 to 4 investment properties only. So that's the next point. With our ARV Pro loan, I will only do 1 to 4 investments. Don't come to me. I want you to come to me with your commercial deals, your multifamily deals, your mixed use deals, but don't come to me for a bridge loan on any of those assets. I only do bridge loans, these mixed use, or excuse me, these fix and flip loans where you have to buy the property and rehab it. I only do that kind of loan where I'll give you the rehab money on 1 to 4 investment properties. Now, if you get a commercial property or a mixed use property, your borrower wants a bridge loan, I have a way of turning our 30-year mortgage into an interest-only loan. So if they want a bridge loan, as long as it has some income coming in and it's a vanilla commercial or multifamily property, I can structure our 30-year product to look like a bridge loan. So you can bring me bridge loan requests. Just understand, I'm not giving any rehab money on multifamily and commercial. I only do rehab on 1 to 4 assets. And then finally, you can always use our exit strategy. So we do the flip and then we do the exit, which is the perm loan, which is what I'm going to get into right now. And if you're just joining us right now, guys, again, John Newfer, I represent Velocity Mortgage Money. I also run a training program. So if you're trying to learn how to broker private money and do commercial mortgage loans, feel free to hit us up. Yeah, if you have a scenario right now, we're talking about Velocity. So moving on to the next slide. And you guys, I'm going to post this video too. If you're just coming in, I'm going to post it. You can rewatch it. All right, let's talk about our flex term product. So we already went over our fix and flip product. Now we're getting into perm loans. So this is what most people would call a DSCR loan when they're coming in trying to get a loan on a 30-year fixed loan with no income verification. The difference with us is we have no debt service requirement. I mentioned that earlier, but it's a key sales point with our product. So let's talk about it. It's a 30-year fixed rate mortgage, fully amortized. So the borrower's paying principal and interest. But the neat thing about this product is we will do interest only on this product. So I used to have a fix and flipper that would come to me. He would rehab a property and then he would refinance into a hard money loan. And he would do that every year or two. You'd be paying ridiculous origination costs, but he'd do that every year or two because he wanted the benefits of interest only. And the reason why he wanted interest only is because interest only allows for a better cash flow. This is where we can give this borrower a 30-year fixed rate mortgage with interest only payments for 10 years. So he doesn't have to keep rolling from hard money loan to hard money loan. He can just use a 30-year perm product and pay interest only for 10 years, refinance in 10 years. Killer option. No balloon payment with this. It's a 30-year fully amortized. Now, what property types do we cover with this loan product? 1 to 4 investment properties, multifamily assets, and commercial assets. So if you have a commercial asset, multifamily, single family, condo, come to me. I'll give you your 30-year fixed mortgage with no DSCR on the 1 to 4s. When we get into multifamily and mixed use, that's when we start having DSCR requirements, but that's common sense. It's not a 1 to 4. I mean, we're talking commercial assets that has to debt service. Moving on. The rates are going to vary, guys. So I'm going to give you the rates with us. Now, I don't want you to get scared on these rates. They are a little bit on the higher end, 9 to around 11% on single family, 10 to 12% on multifamily mixed use, and 11 to 13% typically on your commercial assets, straight up commercial. Now, let's talk about why are these rates a little bit higher than what you see out there. Remember what I mentioned, our underwriting requirements are so simple. What high interest rates should tell you is minimal hangups, okay? We are a minimal hangup lender. So you come to me, like I said earlier, let's say we have a multifamily asset and it has an issue in one of the units. Guess what? I'm not going to kill the deal. I'm not going to make them do the rehab. We'll do a holdback. Let's say you get a single family property and it just completely does not debt service at all. Well, guess what? I don't care. I'm not going to look at the debt service. So many reasons why Velocity's loans have a little bit of a higher interest rate, but it's because we don't have hangups. So if you want to actually get your deals closed, if you're tired of going to all these lenders and getting started and then boom, your deal dies all of a sudden, that just doesn't happen as often with Velocity Mortgage. Not nearly as often because we're a minimal hang-up lender. If you can get used to selling high interest rates, by the way, as a private money loan broker, you're going to make so much more money. The reason why is because higher interest rate loans, these are borrowers who are desperate typically. Higher interest rate loan, if you can sell higher interest rate with us, guess what? You can pack in yield spread with any lender that you're working with. So that's the thing, guys. Get good at selling high interest rate loans. It allows you to actually sell higher fees on the front end. If you're only used to selling low interest rate loans, that means your lower fees on the front end. You're not going to be able to pack in your yield spread. Get used to selling us as a foundational product. It's going to be so much easier to sell all the other loan products out there. All right, let's dive further into it. And again, 600 to 650 FICO score. I actually have a 0 FICO score requirement on this loan too. So I mentioned that earlier, 50% LTV, you get 0 FICO score requirements. All right, now let's talk about just the cheat sheet, just kind of consolidating all these points in your head. Remember, Velocity is killer at 1 to 4 investments. We're really good at major populated areas. I'm not so good in rural areas. So if you get a deal that's rural with minimal sales comps, I'm going to have to stay out of it. I got to stay in populated areas. I want occupied commercial assets. The assets, if you come to me with a commercial property, I want to see that it's occupied. It has some sort of debt service taking place. But if it's not occupied, if it's vacant, I can still do your purchase. However, we have to have an owner user. So our borrower needs to have a business that they're moving into the subject. Now, guess what? No cash flow requirements on 1 to 4 investments. We talked about that. No debt service. However, no cash flow requirements on the 1 to 4 property. So if you're trying to cash out refinance on a vacant 1 to 4, bring it to me all day long. We'll do those. We're really good at auto repair and daycare. So daycare is one of those niches that a lot of lenders stay away from. We will do your auto repair and daycare. By the way, on the commercial side, this is what makes us better than all the other commercial lenders out there. Most commercial lenders stop the bill at $500,000 to $750,000 loan amount. A lot of them will only go down to $1 million loans. Velocity on a commercial asset will go all the way down to $100,000 loan. So when I say small balance, that's really our niche on the commercial side. So if you get a commercial property, every other lender is going to say, don't bring it to me if it's $500,000 loan or less. Velocity will take your $100,000 commercial property loan. We'll take your $300,000 owner user office suite. We are the small balance commercial lender that you can send deals to under $500,000, under $1 million. We're there. All right, let's keep talking about this cheat sheet. Like I said, no rural assets. Office buildings 5+ are cool. Mid-rehab projects. So this is a key point. We do take on mid-rehab projects. So if you have a fix and flipper who got stuck in the middle of a transaction, go ahead, bring it to us. We'll help them out. Commercial deals over $1 million. We do have DSCR issues. Normally, if your borrower isn't bringing a lot of rent. So make sure your guys are bringing in rent on those commercial assets. No special use buildings like bars, funeral homes, no car washes, no gas stations. I want a general use commercial asset if we're doing commercial. All right, guys, couple more key points, and then we're going to call this live session over, okay? So the first thing is our broker portal. I like to call us a fintech company more than just a lender. So the reason why I say fintech is because we have a broker portal that is probably bar none the best broker portal you will ever encounter. Here you can actually get a term sheet same day from me. You can pinpoint your quotes before even talking to your AE. So you don't even need to call me to get an idea of what the terms are going to look like. This is an example of what you'll see in our broker portal. You'll be able to go in, adjust the rates, build in your yield spread, do rate buy downs, do prepay year buy downs. You'll be able to pinpoint your quote literally while you're on the phone with somebody. You don't even need to talk to me to figure out what the quote's going to look like. This is one reason why Velocity is hands down a great foundational lender. And like I said earlier, guys, if you're just joining us, I represent Velocity Mortgage as an account executive. I've been doing it for 8 years now. I run a private money loan brokerage on the side. So when my brokers can't get a deal done here, I always propose, hey guys, if you need help brokering this loan, just let me know. But I always encourage, come to Velocity first. And then thirdly, guys, if you are new to private money and loan brokering, or if you're like a business loan broker and you're trying to niche yourself into real estate, I built a whole program. It's called the Commercial Mortgage Accelerator. I'll share my screen in a second, show you what that looks like on helping you niche your business into real estate, where all you do is broker private money and commercial mortgage loans attached to real estate. So if you guys need help on that end, just let me know. All right, moving on. Broker marketing. Velocity has killer broker marketing resources, guys. We give you PDF flyers. We give you email marketing kit. We have a social media kit. We have a search engine optimization kit, so you know what to actually put in your searches. And we do direct mailers and postcards. So this is just a brief example. If you sign up with Velocity, you're going to get access to all this stuff. It's amazing. So you don't even have to build marketing material around us. We already built it for you. All you got to do is put your logo on the marketing material and you're golden. So if you haven't already done so, if you go to, let's see, if your link chat, let me see if I can give you guys my my sign up link. I don't think I put that in the chat yet. So give me 1 second. I'm going to give you guys my registration link so you know how to register with Velocity and so that you're working with me. If you go and register with Velocity, by the way, guys, just from the home page, you're going to have an issue because most likely you're going to get funneled to a newer AE. We don't want you going to a newer AE. I want you to go to me, an experienced AE. And if it's not me, I will send you to an experienced AE. If you want someone else, just let me know. But let me put this link in the chat. If you want to work with me here at Velocity, This is my sign up link. Go ahead and sign up there. Moving on, guys. Moving on. Let's get back to the presentation. I just put it in the chat. If it would move. Okay, there we go. All right, cool. So if you have a scenario that fits anything that we talked about today, guys, if you have a scenario that's an investment 1 to 4, that's having cash flow issues, if you have a multifamily or mixed use and you're getting shot down due to your residential percentage units versus commercial percentage units, send me the scenario. All I ask for you to do is shoot me an email at jnewfer@Velocity Mortgage. My email is in the chat. Or what you can do, you can register at that link that is also in the chat. If you want to register with me at Velocity Mortgage as your rep, I'm here to train you up all about Velocity products. Or you could just scan this QR code. I don't know how to move my face out of the way, but I could, let me see. Stop. I don't know. You can scan this QR code. If it works, go ahead, and that will register you as a rep with me or a broker that wants to send deals to Velocity using me, John Newfer, here at Velocity Mortgage. Well, guys, I want to thank you so much. This is the end of our Velocity presentation. So if you guys want to get registered as a private money loan broker and want to table fund loans and show as the lender of record, even though you're not actually funding the deal, it's us who's funding the deal. If you want those perks, go ahead, shoot me an email, ask to get set up as a table funder, or register right there at that link. That'll get you registered with me. I'll give you a call and we'll get you set up as a Velocity broker. All right. So that's all I have to share with you guys in terms of Velocity. Now I'm going to just go show a couple links that we haven't already done. So I'm going to show you a couple links on my commercial mortgage accelerator. So if you guys want to learn about how to broker these private money loans, if you want a support system around you, I'm going to show you a little bit about that, how to actually register, as well as I will show you my brokerage website. So let's start with the brokerage website. That'll be the first thing, just to show you guys what it looks like to run a private money loan brokerage and how it would look like if you guys were to go ahead and do something similar. Okay, let's see. Hold on. Give me a second, guys. It just takes a second. Give me a second. All right. There we go. Hopefully you guys can see my screen over here. A bunch of stuff. Got a lot of stuff going on, guys. Obviously, as you guys can see, I run 3 pillars. Like I said before, 3 pillars. I run money with Velocity. That's my number 1. Number 2 is my brokerage. We run a brokerage program. And number 3 is the training program. I want my brokers to be the best brokers. So that's why I have a training program. So if you come to me and you want to broker money to Velocity, I will train you up on Velocity's product. If you want to expand your brokerage, I will train you up on how to expand your brokerage. And if you want to just be a referral partner, it's like, hey man, I don't want to learn how to broker these loans. I don't want to broker them myself. Feel free to throw them at me over at my New Finance brokerage. Now let's get into my brokerage training program. So this is the Commercial Mortgage Accelerator, guys. Now, first off, the Commercial Mortgage Accelerator was created because I come into contact with a lot of business loan brokers and residential brokers who have no clue how to do commercial loans. Some of them didn't even know commercial real estate loans existed, private money real estate loans existed. And this is where I established this program, because a lot of these guys that I see come through, there's a learning curve. It takes 6 to 12 to 24 months to get steady income doing this on your own if you've never done it before. We created systems and processes to teach you how to do this the right way. And basically, we accelerate that learning curve of 6 to 12 to 24 months, which is failure. We accelerate that learning curve just to 1 month. Within 1 month, you should normally have your first deal funded and a pipeline of deals behind it. So if you're interested in learning more about that, I'm going to drop a link below. You'll see we have plenty of reviews here. These are legit reviews, guys. That's Justin and Sabrina. Check them out. They are a phenomenal review. They made 70 grand in their first few months, and I think they're closing a deal with me, and they should be making around $130,000 on these 2 deals here with Velocity, by the way, and plenty of reviews. So if you guys want to check that out, if you want to learn about how to broker private money commercial mortgage loans, specifically niche your business into doing nothing but private money and commercial loans for investors. Check that out. I'll put a link in the chat right now, and feel free to check us out. Now, if you want to be more of a referral partner, so if you would rather say, hey, John, I don't want to broker these deals myself, I would rather just refer the deals to you, check out our brokerage website. So before I started with Velocity, I had a commercial loan brokerage. I've always had a commercial loan brokerage pretty much ever since I've been in this business 10 years ago. But if you want to just be a referral partner, check us out, newfinance.com, and I'll put a link in. You go to the broker section, broker private money and commercial loans. You scroll down here, and let's see, you can either register right here or come down here and learn more about it right here. So go ahead and register as a referral partner. It's free to be a referral partner. Very simple to do. Register and we will get you submitting loans, and I will split commissions with you. On the private money side, you can split commissions still. So on the residential side, you got TILA and RESPA rules, which has simply stopped people from being able to do daisy chains, which basically just means referral partners. On the private money and commercial side, you can still refer deals out. So if you would rather just be a referral partner and you do not want to actually learn how to broker these loans and do it yourself, check us out right there. Become a referral partner. You'll have us, the experts, basically brokering that loan on your behalf, so you don't have to do anything. It's plug and play, and you get paid a minimum 25% of the total funding that comes through on that loan of what we get paid. So anyways, I really appreciate your guys' time today. This will be posted, this recording. So I want to thank you so much. For everybody who's come in and out of the chat, I appreciate it. This is my first live that I've done. I've never done a live on here before. So I hope you guys enjoyed. Today, we went through the Velocity program, the money that I rep personally, Velocity, killer foundational lender. And I gave you a quick overview of a couple of the other things that we do here to empower my private money loan brokers to succeed. So I want to thank you guys once again. Check out the rest of, check out all these links, and I'll see you guys next time. See ya.